So I wanted to get into this subject about income tax because I feel like it's needed. I see a lot of videos on income tax. A lot of people voted for Donald Trump because he want to get rid of income taxes. So I want you to give him this video, the history of income taxes. I'm going to give you my opinion, my expert opinion, somebody that has done income taxes. And, that's pretty much it. Okay, so let's get into the history of income tax, how they came about. Why are we paying taxes and why are there so many tax breaks and tax credits and why? What started this income tax? Okay, so I am going to put this information on the stream here or here so you guys can read along with me. So I just went to Google to search how did income tax start? And what I found was in 1862, President Lincoln signed into law a revenue raising measure to help pay for Civil War expenses. The measure created a Commission of Internal Revenue, the nation's first income tax. It levied a 3% tax on incomes between $600 and $10,000 and a 5% tax income of more than $10,000. Now, let me give you my opinion about that right now. If that was the taxes right now, this was updated September 13, 2024. If that was the taxes right now, I will pay them right now. Because that is extremely low, but the Civil Wars have been over. The Civil War has been over, honey. Why are we still paying taxes? Now, what I couldn't find was a law, what I was looking for, when I type in, okay, so do we know of any laws or amendments to the Constitution that states that we have to pay income taxes? So the law, the 16th Amendment, provides that Congress shall have the power to lay and collect taxes on income for whatever source derived without appointment among the several states and without regards to any census or remuneration. This was updated. I like to say the word updated because some of this stuff already be on the internet and then they go and update it. Anybody can put anything on the internet. So do your own research. But I've screenshotted this. It says it was updated December the 11th, 2024. That's recent. Okay, so I'm going back to the website of the IRS and it says the truth about frivolous tax arguments. Section I, D to E. This was updated March 2022 and we're going to get into it. So I'm going to put it on the screen for you guys to see it. Okay, it says it has different arguments and statutes and legal actions. And the reason why I went to this is because it brought me to it when I typed in the 16th Amendment because it's actually on the IRS's website. Okay, so we're going to stroll down to the part. I wanted you guys to see the whole thing, but we're going to stroll down to the part where it says this argument is based on the premise that all federal income taxes are unconstitutional because of the 16th Amendment was not officially ratified or because the state of Ohio was not properly a state at the time of ratification. Proponents mistakenly believe that courts have refused to address this issue. So in this particular breakdown on the IRS, of course, we know income taxes started in 1862. And from this particular, I'm just strolling through to let you guys see it ended in a conversation in 2003. So let's get into it. Let's see what they're talking about. 1862, President Lincoln signed into law a revenue raise measure to help pay for the Civil War expense. That's how this started. The measure created a Commission of Internal Revenue and the nation's first income tax. It levied 3% for income $600 to $10,000, which I think is great, and a 5% tax on incomes more than $10,000. We all have dreams. That would be my dream. 5% of income tax for people that get paid more than $10,000. I would love that. 1867, heating public opposed to the income tax. Congress cut the tax rate from 1868 until 1913. 90% of all revenue came from taxes on liquor, beer, wine, and tobacco. So I feel like Donald Trump is going back to, even with some of the, I'm going to get into this video because I haven't yet, but I have already did the video on I just gave you guys in the first video on Trump and the history, but we're going to get into some more of that. Let's finish this one. Okay, 1872, income tax repealed. 1894, the Wilson Tariff Act revived the income tax, and income tax division within the Bureau of Internal Revenue was created. 1895, Supreme Court ruled the new income tax unconstitutional on the grounds that it was a direct tax and not an appointed among the states on the basis of population. The income tax division was disbanded. 1909, President Taft commended Congress proposed a constitutional amendment that would give the government the power to tax incomes without apportioning the burden among the states in the line with population. Congress also levied a 1% tax on net corporate incomes of more than $5,000. 1913, as the threat of the war loomed, Wyoming became the 36th state and last state needed to ratify the 16th Amendment. The amendment stated Congress shall have the power to lay. We already went over the 16th Amendment. But at the end, it says later Congress appointed a 1% tax on net personal income of more than $3,000 with a surtax of 6% of incomes of more than $500,000. It also repealed the 1909 corporate income tax. The first form 1040 was introduced. In 1918, the Revenue Act of 1918 raised even greater sums of the World War I effort, codified all existing tax laws, and imposed a progressive tax rate structure of up to 77%. In 1919, the states ratified the 18th Amendment, barring the manufacture, sale of transport of intoxicating beverages. Remember, they was taxing just wine, beer, and stuff like that. So this is where this come in right here. Congress passed the Volstead Act, which gave the Commission of Internal Revenue the primary responsibility for enforcement of prohibition. 11 years later, the Department of Justice assumed primary prohibition enforcement duties. In 1931, the Internal Revenue Intelligence Unit used an undercover agent to gather evidence against gangster Al Capone. Capone was convicted of tax evasion and sentenced to 11 years. 1933, the prohibition repealed. IRS again assumed responsibility for alcohol taxation for the following year and administering National Firearms Act. Later, tobacco tax enforcement was added. 1942, the Revenue Act of 1942, hailed by President Roosevelt as the greatest tax bill in American history, passed Congress. It increased the number of Americans subject to income tax. It also created deductions for medical and investment expenses. So this is kind of when they started doing deductions for income tax. 1943, Congress passed the Current Tax Payment Act, which required employers to withhold taxes from employees' benefit and remit them quarterly. 1944, Congress passed the Individual Income Tax Law, which created the Standard Deduction Form 1040. 1952, President Truman proposed his Reorganization Plan Number 1, which replaced the patron system at the IRS with a career civil service system. It also decentralized service to taxpayers and sought to restore public confidence in the agency. 1953, President Eisenhower endorsed Truman's reorganization plan and changed the name of the agency to the Bureau of Internal Revenue to the Internal Revenue Service. 1954, the filing deadline for individual tax returns changed from March 15th to April 5th. So I didn't even know that. 1961, the computer age began at the IRS with the dedication of National Computer Center at Martinsburg, West Virginia. 1965, the IRS instituted its first toll-free telephone site. So that was their first time getting a telephone, 1965. 1972, the Alcohol Tax and Firearms Division separated from the IRS to begin the Independent Bureau of Alcohol, Tobacco, and Firearms. 1974, Congress passed the Employee Retirement and Income Security Act, which gave regulatory responsibilities for employee benefit plans to the IRS. 1986, limited electronic filing began. President Reagan signed the Tax Reform Act, the most significant piece of tax legislation in 30 years. It contained 300 provisions and took 3 years to implement. The act codified the federal tax laws for third time since the Revenue Act of 1918. 1992, taxpayers who owe money are allowed to file returns electronically. 1998, Congress passed the Internal IRS Reconstruction and Reform Act, which expanded taxpayers' rights and called for organizing the agency into 4 operating divisions aligned according to taxpayer needs. To the year 2000, IRS enact reforms ending its geographic base structure and institutioning 4 major operating divisions: wage and investment, small business / self-employed, large and mid-sized business, and tax exempt and government entities. It was the most sweeping change at the IRS since the 1953 reorganization. 2001, IRS administered a mid-year tax refund program to provide advance payments of a tax rate reduction. 2003, IRS administered another mid-year refund program that this time providing an advance payment of an increase in child tax credit. Electronic filing reached a new high, 52.9 million tax returns, more than 40% of all individual taxes. So that is the history of the income taxes, how they started, the gist of it. So let's get into my opinion. So I'll give you my expert opinion from a person that did income taxes. Let's get into it. So somebody like me that was a tax professional before, the only people I saw that benefited from income taxes was poor people and rich people, as in like small business owners, people that had a lot of kids, that have these child tax credits. Those are the only people benefit. Middle class people like me, we don't benefit. That's why a lot of us voted for Donald Trump, because we don't benefit from income taxes. There's no benefit for us, honey. All we're doing is paying and paying and paying. We don't get anything back from it. I would love for him to propose the old income tax. As you see, it's 3% for one income and 5% from another income. I would love that, because right now, I think I told you guys, if you make over $150,000 in American dollars and you're single like me, you're paying $17,000 to $25,000 a year in income taxes because you don't have anything to write off. Now, of course, if I had like a house or a small business or any type of anything to write off that is sustainable within the means of the IRS and what they see fit is something I can write off, then yes, I can write that off. But they have a list. It's a list that you go down.